Are we in an economic recession? This week on the Extreme Personal Finance Show. My name is Chris. This is we're rebranding, relaunching the podcast. We had a bunch of episodes over the past few years, but now we're relaunching the podcast as the Extreme Personal Finance Show. I'm joined with my friend here, Dan.
Hello.
And today we're going to go through a little bit of kind of who we are, why we're doing this. And then we're going to jump into this week's focus, which is, are we really in an economic recession? It seems like you can't really go anywhere or read any sort of headline without somebody scaring us into thinking.
True. Or doing their best to scare us, at least.
That's right. That's right. Well, but many of you know me. My name is Chris. Again, from the blog Heavy Metal Money. I've been blogging since around 2015, all about personal finance, basically spending, saving, investing, and earning, all turned up to 11.
Nice.
There. All right. Dan, who are you?
I am maybe slightly less extreme. As Chris mentioned, my name's Dan. Started a little bit after Chris getting into the personal finance area. 2017, realized I didn't know much anything and needed to fix that. So a lot of books, a lot of blog posts, a lot of podcasts, a lot of everything, just educating myself. And then just kind of turn my wife and I, our financial situation around. Enjoyed it so much that started pursuing some education, doing some accreditations here and there, and just looking forward to being part of this podcast with you going forward and seeing where it takes us.
Thanks, Dan. Awesome. It's pretty cool that we're actually in the same room, which is pretty rad. Let's go ahead and actually kind of jump into it. We hear that the U.S. is in this economic recession. Are we or are we not? And I think it might be really important first to kind of look at what are those defining factors? Like, what are those things that the economists say, well, this means that we're in a recession. So typically, a common rule of thumb is that if we have 2 consecutive quarters that have negative growth in real kind of GDP or gross domestic product.
Sure.
And I did want to just mention too that, not all of us, again, I have a blog post talking about all the acronyms and terms that are thrown around. Basically, GDP or gross domestic product. I mean, really, I learned that like when I was in 7th grade, and then never.
And then you don't use it, right? Yeah. Well, because you learn what it means, but it's the gross domestic product. It's not like the Dan's domestic product.
That's right.
Or the Chris's domestic product. So it's like GDP is up, GDP is down, GDP is whatever. It's like, well, what does that mean for me?
Right.
So
it measures the monetary value of the goods and services that are bought by the final user. So is GDP up or GDP down? That's kind of what that measures.
Sure.
Awesome. So I think that it's interesting because there's also things that we measure. So that's like what the economists measure. Mm-hmm. But there's also this organization, the National Bureau of Economic Research, who says, well, there's a lot of other indicators we can look at, like employment rate, industrial production, like what are we actually making, wholesale retail services, how much is the Target and Walmart's buying in the world, but also our income and employment, right? So let's go ahead and dive into this. So the number one thing, and again, I'm curious to hear what your thoughts are,
sure,
is the actual GDP, because according to the data, we're not in an economic recession, because the data states that GDP over the last 2 quarters of 2023 and then the first quarter of 2024, those 2 quarters, there actually has been growth versus negative growth versus a contraction.
Right.
So according to that particular stat, well, it doesn't define a recession.
Right. So then everything should be great.
Everything
shouldn't be worried about it, right?
Everything should be wonderful.
Right. Well, which I then think we mentioned it earlier, just like trying to build that fear and whatnot, because just like so many things, fear is what gets people's attention. And a lot of times there's so many industries these days that they make their money not off of an actual product, but off of your attention. And the best way to get people's eyeballs looking, fingers clicking, doing that stuff is to say something that's going to scare you. Oh, I need to find out more about this, because what does that mean for me? And so a lot of times, even if you look at that data and it says, well, see, it's 2 consecutive quarters and everything is good, you're like, well, that means this quarter is going to be bad. So I need to prepare myself because it's going to happen, and the truth is, I mean, maybe it will, maybe it will go backwards, or maybe it won't. Maybe it'll keep going up for a little bit more. So kind of going back to what I mentioned before, as far as, what is my domestic product? What does my situation look like? And being able to say from that, it's like, okay, well, I'm doing all right. And then knowing that at some point, just these things move in cycles. At some point, inevitably, we're going to be in a recession. So what actions can I take and behaviors can I start to make more habitual now, so that when that happens, I can manage it from a position of strength rather than from a position of I won't call it weakness, but where you have to deal with a whole lot more uncertainty. So it's when the times are good, that's when you should be taking those actions to ensure that when times aren't good, that you're less affected.
Right. There's in part of those, a few of those indicators too, is looking at things like inflation, the unemployment rate, stuff like that. And I'm kind of curious to your opinion too, is a lot of people think we're in this recession or we're going into a recession because of, again, inflation. It's been the top of the talk as well. Just as many headlines as the recession is inflation. It's out of control. And we know it has affected us over the last, few years, but 72% of the people in a recent survey believe that inflation is still increasing. But in reality, it's actually been declining for the past several months.
Right. Well, I think that's what confuses some people. And it's good to kind of to take a step back and say, okay, let's talk about what does it mean that inflation is slowing down. What some people's impression on that is, okay, inflation is slowing down. They think that things should be coming back to the prices that they were.
Right.
But that's not how it continues to work.
Yeah.
Things are still going up in price. It's just going up in price at a slower rate. So it's, instead of something going up, just for easy math, 10%, so something was $1, now it's $1.10. It's going up 3% from $1 to $1.03. So it's still increasing. And so that's, I think, what gets people to believe that no, inflation is still terrible because the price still went up. It's like, yes, the price did still go up. It's just not going up as fast as it was before. And because of that, they just assume that it's still out of control.
Right. And I think it'd be a good time, have a podcast episode specifically talking about inflation, places that we do see it. I know we had a great meetup a couple of weeks ago talking about where we saw inflation the most, like insurance premiums was a big one, stuff like that. But also, some tips, tricks, tactics on how to combat some of the higher prices. I mean, that we all see, even shopping at Aldi, you'll see higher prices than you did a couple of years ago.
Yes.
I'll say I just left Aldi yesterday with $100, and I'm like, normally I'm not over $100 a week, so it was like
true. Yeah. My wife and I used to play a game when we would go to Aldi as things would go through, and we would guess what the shopping cart total was going to be. And I did start noticing, like, because we're both wrong, and we're just like, whoa, what happened?
That's right.
So yeah, we definitely noticed it in the grocery store for sure.
So I think a couple of the other key indicators, like looking at unemployment, is a big one, right? So that indicator, again, another thing that's kind of contrary to the belief of what's out there. People think that employment is at this major high point, but it's actually at a 5-decade low.
Right. Yeah.
So why do you think that is?
Well, a lot of times I think that can come down to what somebody's personal situation or just the people that they know, right? So, and Morgan Housel talked about this at one point. It's like your impression of what the world is around you is we're not in the whole world. We're not seeing everything. We don't know everybody. So our opinion is just based off of the people that we do know and the circles that we do follow. So if we know 2 or 3 people that might have lost their job, and we are close enough friends with, say, 20 people,
Right.
that's a pretty good percentage of people that just lost their job. So
Sure.
then we extrapolate that out to, oh, everything must be going poorly, right?
Right.
So again, it just comes down to, what are the headlines that we're seeing? What are the social media stories that we're seeing?
Right.
And so many of those are also people who have, a lot of times, have created some kind of course or following based off of they need you to follow them for advice.
Right.
And so you're going to follow them for advice if you give them a reason to tune in all the time.
Right.
Which, I mean, I'm hoping people will continue to tune into us. So, I mean,
Yeah.
to a certain extent, okay, I get it. But being able to kind of take in that information and then be willing. I was just speaking with some people about a month ago. It's just like about financial literacy. It's just like, we still need to have a baseline of knowledge.
Right.
We can't just, expect everyone else to give us what we need to know. We need to be willing to go to different sources and find out for ourselves. That way we can, whether we believe certain data or not, we can at least go out and do the research and find different points of view and say, okay, so then what's my truth,
Yep. I think that's what's important. What's my truth? I like that. Yeah. One of the last things I'll talk about is one of the key indicators is stock market performance, right? And so it's crazy that, again, the perception is so far from reality, because again, other people, they feel as though we're in a recession because there's this perception. Like nearly half of the respondents in this one survey said the S&P was down in 2024. But in reality, it was actually up like 12%.
Right. Yeah.
And so with the rising stock market and then all the other things we just talked about, again, by a definitions standard, we are not in a recession. Mm-hmm. But I mean, what are your thoughts about, like, again, kind of the stock market performance? But then most importantly, I'd like to know why it doesn't matter. I think I want to let people know, like,
sure.
Does it really matter?
Okay. Well, it does matter and it doesn't matter. And it depends on who you are and where you're at in your life stage, basically. But so thought that entered in my mind as you're talking about the S&P or whatnot. A lot of times, if you follow things like CNBC or Yahoo Finance or whatnot, it's interesting to kind of tune in the morning and then tune in the afternoon. And you'll see, like, sometimes the polar opposite stories on the same day.
Right.
Because the market was going down real low and then something happens around lunchtime and all of a sudden the market's high. And so it goes from doom and despair in the morning to everything is amazing in the afternoon. Right. And unless you're actually, geeking out on it like me and just trying to figure out, it's just like, all right, what are they trying to get me to think today? And just making it a goal kind of to see at what points are they giving conflicting information. It's easy to miss that, right?
Sure.
So if you tune in at one moment or even one day, because I'm sure at some point we'll do a podcast talking more about stock market and volatility and whatnot. But just because the market goes up over the long term doesn't mean it goes up every day, right? So there's going to be a day where it's like, oh, it's down 1% today, or it's up 0.75% today. And if the day that you happen to tune in is a day that is down, again, that's your perception of what is the market doing. The market was down today. It's like, well, that's one day.
That's right.
And assuming it's a regular week, and it's out of 5 trading days that week. So, I mean, you're still going to make this broad generalization about something that really needs to be zoomed out and looked at over a longer period of time.
Yeah.
So
when in doubt, zoom out.
Exactly.
Right.
So, and then does it matter? Short term, it could matter for some people depending on, like, let's say that you're retired already. You're not in your earning years anymore. It would matter how the market is doing, but not to the point where you take an action in the moment, right? It would matter more to seeing how you feel in that moment and then taking that as a way to inform, okay, this is how this is making me feel, and this is how my investment portfolio or my financial picture happens to look. Do I have things going in the right way for me? Because some people can stomach that volatility a lot better than other people can. So if it's one of those things where it's like, oh, it matters to me because it makes my stomach turn a little bit to see the market, then maybe you're not invested in the ideal way for you. Because the best, no matter what anybody says, my opinion is the best portfolio and allocation whatnot to have is the one that you can stick with. Because if you're always jumping in the market, jumping out of the market,
if you have, it's really understanding your own risk tolerance, right?
Absolutely.
And so if it's going to, like you said, you got to find the right balance where you're not going to make those knee-jerk reactions. It's less emotional, and just stay the course. I know. So recession as a whole, there are many factors why people still feel as though they may be in a recession, right? Maybe they're seeing, higher grocery prices. They see crazy sky-high mortgages, higher rents. They may feel that the economy is less stable, but really, this isn't what the data says. It's definitely more of like an emotion. And like you said, it's very individualized.
Yeah, absolutely.
Right.
And to the point where you look at these things and like if you see that things are starting to cost a certain amount and whatnot, and there are different opinions on it. I'm a fan of budgeting. I love getting into the numbers, and I do it in a manner that I think a lot of people think budgeting is just spending tracking, and that's not how it is. That's a podcast for another day.
Yeah.
But if you know what your costs are and you know what you're going into, and then you know what the market is and you know how the job market is, you can start to look at, okay, I have job X, right? Well, what's the going pay for people in job X? And using tools like Glassdoor, becoming more comfortable with talking about money on your own and with other peer groups, whether they're your friends or professional groups who also have that job, and just trying to start having those conversations and understands like, oh, maybe I feel like I'm struggling more because I am underpaid in my position, and knowing like I should be making more 10%, 50% more than that's why I feel like I'm struggling right now. But you can go into that topic with a better understanding if you know what the economic conditions are. It's like, well, everything should be going fine, and I know my company is doing really well and performing well and whatnot. So you can start to question things. And I mean, I don't want to say like get conspiratorial about it or anything, but the more you know, right? And then the more you can be able to figure out your situation and then see, maybe it's time to make a change somewhere based off of that information, but doing it based off of good data and not just headlines.
Yep.
Right.
Awesome. Well, I think that'll kind of wrap up our very first combo episode with Dan. Thanks, buddy.
Oh, my pleasure.
And again, my name is Chris. You can find, all of our details. We're going to make sure, we got to get a new podcast page up on Heavy Metal Money. Make sure we get all your contact info as well.
Sure, that'd be fun.
Yep, we're going to get all that info up there. Again, you can find articles on recession and tons of other stuff over on heavymetal.money. We look forward to seeing everyone again soon. See you next time, and have a great rest of the day.